we know what's going on worldwide or what's going on domestically and how they couple, and then looking at the specifics for that particular security, whatever it is, whether it's a futures contract or an index or a stock or whatever it is. And we look at then specifically within the lens of the macro view and then jumping to the micro view of, okay, this is the current price. This is where it's been holding over the last 52 weeks, the last month, this quarter, whatever it is. And in light of that, this is how it's likely to perform. There's also other things you can look at that there are scheduled events that hit the calendar, whether it be, some kind of earnings call, some kind of regulatory announcement of some kind. You really got to pay attention to the calendar as well, because if you're only looking at macro events and specifics to whatever that security is that you're identifying, then you're going to miss some of the other things, because it's not very often that the market gives you gimmies, that are guarantees. Calendar events, scheduled events are guarantees, It's one of the few guarantees you'll find in the market is scheduled events. And if you're not leveraging that, then you're being foolish, because it's like, okay, on this day, on Wednesdays, I know that there's going to be an announcement about, consumer price index at 9 o'clock. Oh, I know the Fed chair is going to come in and speak, blah, 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 blah. And how that affects, any given security, it may not affect all of them, right? But it will affect some. And if it does have an effect on your specific security and your trading strategy, then you need to be aware of that. And that's really getting into the granular as far as like guaranteed scheduled events.